Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, October the 2nd. My name is Eric Wilkinson and you may recognize me from mainstream media as the Wolfman. But what I'm here to do is teach you guys how to implement an option strategy and trade options in your portfolio. Please remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, that's out of the way. Getting on with some economic data. We have Williams speaking today. So a lot of these Fed governors are starting to ramp up their talk about interest rate cuts. Thing to note, Fed Fund futures had a rate cut priced in slightly for December, but now there's a 70% chance of a rate cut here in October coming up here this month. So everything is rolling forward like we talked about yesterday. Now we're starting to see the futures in the broader market really start to price that in. I think that the FOMC is going to follow suit with that and probably cut rates rather quickly. Try to weaken that dollar. We're seeing the exports not do so well. If you take a look at Caterpillar and Deere, they're really suffering due to that stronger dollar, weakening economies overseas. They do a lot of their business outside of the United States. So a lot of those companies are really starting to hit. I mean, you can throw a dart at the dartboard and most things are off on the day. I think IBM was one that was actually doing all right not too long ago. And we can talk about some of that stuff a little bit here shortly. But something to talk about, we did get ADP, non-farm payroll. That usually comes out right before the real number. It comes out on the first Friday of the month, which is the non-farm payroll numbers. This is the ADP one. And it came in at 135,000 hires, expected to be 140. Last month's number, remember, was way off. Well, they revised that down quite dramatically as well to kind of follow suit with what we saw with the real number on the unenjoyment number that comes out the first Friday of the month. All right. Also, crude oil inventories, another build of 3.1 million barrels, expected to be a build of 2 million barrels. Remember, last week we saw a much bigger build than expected. I think you can continue to see something like that happen as we may see some of this slowing down of the economy. We aren't quite in recessionary. Remember, we have been looking at the manufacturing sector two months in a row of below 50, which starts showing contraction in the economy. 3 in a row really starts to signal recession, especially if it gets down into the 43-ish area. Mid to lower 40s is really recessionary. We haven't seen the service sector really show that type of weakness. We are mostly a service sector economy, but again, all in all, really not great economic data is coming out recently. All right, crude oil. Yesterday, starting to look like we are going to find a bottom. Let me pull this out a little bit. Starting to look like we are finding a bottom over here. That doji yesterday was trying to make me look kind of silly. Usually we see some kind of doji like that at the bottom of a move. That a hangman doji. Today, no confirmation, just completely wiped that out, and that has to do with the build. Most people a little bit fearful that the economy is slowing and there's going to be a lack of demand for oil. Remember, oil isn't just going into gasoline and us consumers using that. It goes into the manufacturing process to make your PVCs and stuff like that, your plastic cords and things of that nature. Actually, something recently, they've used a lot of peanut oil, believe it or not, for your cords. And that's why mice and things of that nature like to chew on those things, is because it's a peanut oil. And anyway, just a fun fact there. All right, but we've got crude oil coming off right down there to that $52 and around 50-cent area. We could really see this market extend and test this value area. I don't really want to see it go too far below that, right? Because I've talked about this, that starts hurting the refiners. We'll start seeing the fracking start to slow down. We'll see the oil refiners here in the United States start to slow down on production, and that then starts driving it prices higher on lack of demand, which isn't always the best thing to have, right? We don't want to see our prices go up when everybody's struggling. All right, gold moving higher again today by about $18.50. Yesterday made a nice solid bottom after we tested that 1475 area. That's where we found a lot of support late in the day. Market rallied up today, just almost unabated to the upside back into that 1500 handle. Now, we don't have a line of delineation as to that 1500, but you can see that psychological level kind of falling in there. I probably should try and start using maybe a line here so we can see that 1500 area. Oh, that was terrible. We don't want to use that one. Let's see, what else could we use? What does this one do? Let's try something else. There we go. You can see that kind of lines up with that 1500 area. A little bit shaky, but you can see more of a psychological level there at 1500, but it has acted as a support and resistance in the past, and because it is a psychological level, it will act like that going forward. So bulls want that to stay above there. Again, I did end up playing gold to the upside and bonds to the upside, like I talked about yesterday in the daily market commentary. Bonds moving higher. You know, one of the things everybody's worried about is China owns a lot of our bonds, and if they really wanted to put the smack down, they could start selling these. I don't think they're going to. Why not have a decent interest rate? They're not going to sell it despite us. There's no better product out there on the market for a safe haven. Also, you're getting paid an interest rate here, and some countries are giving you negative interest rates, which doesn't make sense at all. VIX spiking back into the 20s. We're almost into the 21 handle. I think it even touched on that today earlier on. As we start to move higher, that's because we are seeing a massive sell-off here in the Dow Jones, down about 250 points. I thought it would take a little bit longer to come down here and test this 23 Fibonacci we talked about. That right now we're looking at this 26 handle. That could easily be lost. Bulls and bears are going to fight over this area right here. This is like, it says 2637, but we can call that 26,000. That really is going to be the star thing to look for. All right. Yes, my Fibonacci is lined up a little bit higher than that. They will try and defend that area all the way down to 2600, but as today goes, 25 points, even 50 points can be wiped out in a matter of moments. I believe that we are going to come back down to this point of control here, pretty soon. I don't know that we're going to really see anything that changes that data. I think that it would be a surprise to me if the non-farm payrolls number on Friday comes out much better than expected. I think it most likely will come in probably a little lower than expected after seeing the PMI numbers. I think that those purchasing managers, right, are going to be seeing that recession coming down the pipe and are going to hold off on hiring, and therefore it's going to show up in this number. That's why, even the non-farm payroll being one of the headline numbers that everybody talks about is, a big economic indicator. Well, we've kind of gotten a light bulb kind of going off right here with the ISM number that's more forward-looking than the non-farm payrolls. Non-farm payrolls is hindsight. It's already what's happened. These other guys are looking forward as to what's going on. All right, looks like this 7450 in the NASDAQ is going to be something that is almost a sure thing. You can see the NASDAQ down over 140 points right now, down almost 2% on the day. That's a pretty darn big move. In the NASDAQ, 150 points is a big move. We kind of blew right through this point of control, not accepting a lot of price there, and the volumes are pretty substantial today. It's not like it's a light day and this market is selling off on lack of volume. There is some volume behind it, which really tells you that this is a pretty realistic move. It's not something that is going to snap back right away. There's a lot of people coming in there and selling. People are buying puts with both hands, which is what's driving that VIX higher, as we saw there in the VIX up almost near 21. Here we go. The E-mini S&P is right back down to the point of control, lining up with 2890-ish. A little bit further overextended from that. But again, we've talked about this before, that we've got a couple of volume nodes here that I would expect to start getting filled in right in between this 2800. I do believe we'll probably see some of this hold. I don't know that we're going to get down to this 2800. I think that this 2833 area is going to be a nice area, which lines up with the 38 Fibonacci. I think we're going to hold that. Unless this number on Friday really is horrible, I think we'll hold that, because the idea is we're going to start seeing the Fed probability of a rate cut being more realistic. Those guys are going to try and get ahead of this. We've already seen that Europe is in recessionary mode, and we really have gone a very long time since a recession, over 10 years. Usually we get a recession every close to 10 years. It's not quite there yet, but we are close, and it would be a surprise if we kind of held off at this point, the way that the overall economy is kind of heading across the pond and here. I think that we're going to see a little bit more easy money weaken that dollar. That should then start driving equities higher as we start seeing that heading into the holiday season, there's going to be some easy money. You can see here today, open of the session, there is almost no real support. I think we started getting some support right around 2890 when we broke, right around that 2900 area. It felt like we were going to get support, broke down just below that. It looked like the market was going to try and recapture that 2900 handle. But again, every time we see a little bit of support, we're going down there and breaking that. You can see if we let me see if I can pull this out just a little bit, stretch it out a little so we can see this doji. Again, we talk about this. It looked like we were trying to find that little bit of support right in and around this area here, which kind of lines up with where the point of control is on the daily. But you can see pulling over here, that 2890 area. We got a doji that was a little bit inside. We didn't get it extended past this here line right there. So we got that doji that was, but it didn't go down below the previous bar. So made it a little bit of a weak support area. Then we got this green doji that kind of looks like, we've got the green doji that looks like that. But when we get that below, that looked pretty good. If you forget about this little red one, we've talked about this before. Anytime you get those that kind of line up together, that usually means it's going to continue down, and that's what we're seeing. We've gotten this bar now that looks like that. I would expect us for the rest of the day, until we see some support, continue on to the downside, especially in the E-mini S&Ps. So not a whole lot of good news coming out of me today, as you can see. But having said that, we did get out of some of that tech sector. Remember, as a rising tide lifts all ship, when we start seeing the markets fall out of bed, some of the more volatile things in the markets are going to go first, which is tech. Tech is going to be one of those first things people dump out of as that, kinks in the armor start showing up. Well, with XLK, I talked about this yesterday. I'm looking to pull the ripcord on that, and I had on those. What was it? The October. I was short the. I think it was the October. Actually, no, sorry, it was the DEES 82 calls in there, and I got out of those for a loss of about 20 cents. So only stayed in it for a little bit. I knew that this was just going to start falling out of bed. Especially first thing to go would be the tech sector. Obviously, we start seeing the equities fall. We start seeing flight to safety, that being the bonds. We were talking about that with the FOMC cutting rates a little bit sooner than what was expected. So playing that to the upside, and gold to the upside. If we try and start weakening that dollar, that is going to be something that starts seeing some strength. So TLT playing to the upside. I went into the November and sold the 157 puts, sold in the 137 puts in there. That essentially on this big move to the downside here, those 137 puts putting me in right around just below that low. I can't imagine anybody thinks that interest rates are going to go higher until we see more economic data that is good. We're not going to get good economic or real forward-looking economic data for quite some time because we just got that ISM number. That's not going to come out for another month. So I cannot imagine there's going to be anything that economically changes the thought process of TLT going any lower than 137. So that seems like a pretty safe bet. Sold those for 74 cents. Going to be looking to get out of those for 50% of my max profit. Over here to GDXJ, it's going to follow gold as gold goes. GDXJ goes, right? As gold starts increasing in value, those junior gold miners, which is what is in this ETF here, is going to do well. And went in, as you can see, we have that high implied volatility percent here. It's up near the 90s for GDXJ, I believe. Sorry, 75 percentile. It seems a little bit higher than that, but that is where we start to look, you know, anything in an ETF, we start to look to sell premium above 30. I'm up above 70. That is, seems like a no-brainer in there. So I went into the NOV, sold the 34 puts in there. Again, way down here, you know, the beauty in having that high volatility is it's way below where we are. It kind of lines up with this 200-day simple moving average. That's what we got right there. And that would act as support. As this market starts going, that simple moving average is going to move a little bit higher. So I've got a lot of areas of support. If I threw up the Fibonacci, I've got a lot of other things that are in my favor. I think that this market is going to start moving a little bit higher and come back in and around this area to start settling down. But we very well could see this area be tested, that 43 handle, as we get more monetary policy coming out of the FOMC. So with that being said, I believe I said it, sold the NOV 34 puts in there for 65 cents. Again, probably going to look to get out for 50% of my max profit. All those other things, if you guys remember, I put on the SPY long straddle. That's starting to look really good. Tech sector being one of the first to start showing weakness. Tesla yesterday actually bucked the trend and was rallying, so that hurt a little bit. But today, seeing that start to roll back over, I'm long those 225 puts in Tesla. So looking for that to continue to the downside. So that's about it. I haven't added anything today. Going to let all this other stuff work itself out. And that's about all I got for you, other than if you can't take that, take it easy.